Welcome to the Where There's a Will, There's a Way podcast with Coulter Legal, where we share our insights and bust some myths on wills, estate planning and deceased estates. I begin today by acknowledging the Wadawurrung people, traditional custodians of the land on which we are recording this podcast today. We pay our respects to their elders past, present and emerging, and extend that respect to Aboriginal and Torres Strait Islander people listening to this podcast. Hi, and welcome back to Where There's a Will, There's a Way podcast with Coulter Legal. I'm Stefan Manch. I'm a principal lawyer and head of the Wills, Estates and Succession Planning team here at Coulter Legal. And this is our podcast all about estate planning, estate administration and connected matters. Today on the show, we've got lawyer Tristan Burke. He's a lawyer in our Wills and Estates and Succession Planning team. We're really happy to have you on board. Tristan, you're a podcast veteran these days.
Yep, my third one.
Welcome.
Thank you.
Now, today's topic is quite particular. Today we'll be talking about special disability trusts. And we'll talk about this in the context of just general life and estate planning. It's going to have a very specific importance for certain listeners. So part of that general life planning, but also part of the estate planning process, because we can work them into wills as well. But we're going to go from the very top. So Tristan, just a bit of a refresher for our listeners. Can you explain the basic concept of a trust first?
Yeah, of course. So a trust is an entity that's kind of created to hold assets for the benefit of other people. Mm-hmm. And it gets its benefits because the assets that the trust holds, they're not in the individual's names. So there's some separation between the beneficiaries and it's my audio. That's better. Sorry. There's separation between the beneficiaries and the assets. So that it provides things like asset protection. There's some tax benefits as well, and some greater flexibility with planning and passing on assets to a broad range of people. The people who manage the trust are called the trustees, and they can be individuals or it can be a company that has some directors, and that's called a corporate trustee. Mm-hmm. And it can also be a professional trustee company who manage trusts for a living. They charge a fee, but that's what they do day to day, and they're quite good at it.
Great. And so what we're talking about today is a particular type of trust, and it's called a special disability trust. Special disability trusts are really broadly a trust to benefit a specific disabled beneficiary. And they came about, they're a trust that is allowed and in fact was created by the government. And they came about because disability support pensions, which are government pensions paid to people with a disability, are income and assets tested. And so if a beneficiary of the disability support pension has assets over a certain limit, it starts to reduce the amount of the disability support pension they get. And so what was happening was to make sure that disability support pension didn't disappear, parents and family members of a disabled person were essentially excluding those children from benefit via their wills or during their lifetime, so that they wouldn't impact their pension, which is obviously problematic. The government realised that was a problem, and they've legislated to create this special type of trust where assets can be gifted into a special disability trust for the benefit of a person with a disability. But once the assets are, within some constraints within that trust, they're not considered assets for the assets test for the disability support pension. So they're assets that can benefit a person without affecting their assessment, for that pension. So, Tristan, can you now just explain the basic structure of a special disability trust?
Yeah, absolutely. So as you've said, it's kind of like any other form of trust, although it's set up for a special purpose, which is to provide for the expenses of a person with a disability. And we'll get into, the criteria of what constitutes, someone who's eligible for one of these trusts shortly. But essentially, the person with a disability is the primary beneficiary of the trust. They can only have one trust set up for them, and the assets that the donor, which is often a parent, would or a grandparent, for example, would put into the trust, that the trust would hold, are things like property, investments, cash, things of that nature. And the trust that's set up for the person maintains those assets. The trustee controls it and makes distributions as and when they're needed.
Great. And so you mentioned off the top eligibility. That's, obviously that's the gateway for the use of a structure like this.
Yeah.
Can you take us through what the test or the grounds for eligibility for a special disability trust are?
Yeah, I can. So that is generally step one, is making sure the person can actually benefit from one of these trusts. They're eligible, which is something that Centrelink kind of decide. It's legislated. So there's two. When you look at this, you're looking at whether someone's over 16 years old or under 16 years old. The tests are slightly different. The majority of the ones we deal with are when people are over 16. So
Yes.
I can touch on that a bit more. But essentially, if you're already receiving a disability support pension and you're unable to work, if you're unable to work more than 7 hours a week, generally you will qualify for a special disability trust. There are some finer details to look at, but if you're already in receipt of a disability support pension, that's a big step. If you're not, then you can be assessed by a medical practitioner, and there's certain criteria that they'll assess you against, and that will get you your eligibility.
And as you said, that needs to be ticked off first before we can sort of get any further into the process.
Exactly, because you don't want to spend, the money and the time creating one of these special disability trusts, and then when you go to submit it to Centrelink, they knock you back because you weren't eligible in the first place.
Yeah.
So that is definitely the first step. So if you're not already on a disability support pension, and you're able, it's maybe touch and go whether you can or can't work more than the 7 hours, then we would refer you off to a medical practitioner to get formally assessed as eligible, which may happen anyway, just to ensure that you are eligible. But obviously that's on a case-by-case basis.
Yeah.
And I'll just briefly touch on if you're under 16, just
Sure.
for people who this is relevant to. So the definition is slightly different, but if you're under 16, you need to be considered to be a profoundly disabled child, as defined in the Social Security Act. There's some other criteria, but that's generally the most common, and that profoundly disabled child has a special meaning within the Act. Again, if that's your circumstance and you're coming to see us, we'll give you some tailored advice around that and ensure your child is eligible.
Great. And so let's say we've crossed that first hurdle of eligibility. Then we'll start to consider, well, what assets are going to pass into this trust? What are we going to put in there to provide that asset base for benefit? And we did mention early on that there are some certain limits around those assets. Can you take us through the asset limits for a special disability trust?
Yeah, absolutely. So this is indexed every year with CPI, so it does change year on year. Initially, the limit was set at $500,000, and as at 2023, the limit is $781,250, which is a very specific number. As CPI increases, that number also increases. So this will change year on year. But that asset cap limit essentially means that the collective pool of assets that the Special Disability Trust holds up to that point will not affect someone's disability support pension.
Yep.
So they will continue to receive their full entitlements.
And look, this will impact different scenarios differently, but there can also be a property, and as long as that property is the main residence of the disabled person, so it's the property they live, that property can be held in the trust and there still be that $780,000 asset cap
Yep.
on top of that. So the value of the property is invisible, plus that $780,000, indexed year by year. So as you can imagine, it's a fairly significant balance. And so if we go, if there is assets above that cap, those assets are then assessed against the disability support pension, but it's only if we tick over that cap. So it's quite a generous asset limit.
Yeah, absolutely. It's actually a really fantastic thing the government have kind of permitted, and it is really generous. And the CPI increases, like I was looking at the table preparing for this podcast, and it looks like each year the asset cap limit does go up quite a bit just to keep up with inflation, and it's quite generous. So it's a fantastic it's a fantastic mechanism.
Yeah, absolutely. So we've worked out what assets we're getting into the trust. Then we start to consider, well, how are those applied for the benefit of a beneficiary? And so broadly, the idea with a special disability trust is that the assets within the trust and any income that those derive are applied primarily for that primary beneficiary's accommodation and other expenses in connection with their disability. So if there was a need to update a property because of the disability, if there was, to pay rent, if there isn't a property already in the trust, payment of health insurance, private health insurance premiums, medical costs, all those sort of things, those are all those can all be paid for from the trust, and there's no cap on that expense. So that's essentially unlimited. And then for spending outside of that, so we call that discretionary spending. So whether that's new TV or a holiday or new furniture that's not specifically required in connection with the disability, there is a limit of and it's at the moment, again, it's indexed by CPI. At the moment, it's about $14,000 a year, which can be applied to that discretionary spending. So as you can see, the idea with these trusts is, yes, you can have a whole lot of assets which are hidden from the assets test for the disability support pension, but primarily they have to be applied for that individual's benefit, only for that individual, the primary beneficiary, but for benefit in connection with their accommodation and medical and health related costs. But there's still that discretionary spending amount each calendar year, which can be applied. So with that, there are some potential disadvantages or challenges with maintaining and having a special disability trust. Do you mind taking us through those, Tristan?
Yeah, absolutely. So one of the potential issues is if you set one of these special disability trusts up in your will, if there's, for example, legislative changes, or changes to the person with a disability circumstances, when they are then assessed by Centrelink to be eligible, the law could have changed or the circumstances could have changed, which means they're no longer eligible. We'll talk about some strategies that we can put in place to prevent those issues in the will, but that's one potential downside. There's some investment limitations on what you can actually invest in the special disability trust. You need to put forth an investment plan to Centrelink about how you're going to invest the money and what the special disability trust is going to hold. Every year there's a tax return that will need to be done or a report that will need to be prepared that will go to Centrelink, basically detailing the financials of the trust, what distributions have been made, what their purpose was for. So the record keeping can be a little bit onerous. And like I mentioned before, there's always the risk that the law could change down the track. And, it doesn't, we have no indication that this will happen, but, you never know what governments might do, and they could change the laws around the use of these trusts. So,
yes.
But there's some of the considerations. And one other consideration is you need 2 trustees to manage this trust if they're individuals, or one professional trustee who is, for example, from a trustee company or who is a lawyer, or you need a corporate trustee, so a company who's acting as the trustee with two directors. And if anything happens to a trustee, they need to be replaced fairly quickly. So if it's family members, for example, and they're, getting older or they're not able to act anymore, there's this, you need to think about who's going to manage the trust into the future. Yeah,
absolutely. And I think another thing to mention about those potential downsides, or really just matters to consider, because special disability trusts can both be set up during a person's lifetime and, through a will after they pass away, there are some great advantages, for setting it up during your lifetime. There are some great stamp duty and tax concessions for gifting assets into a trust. So, for instance, a parent of a disabled child might gift a property, and set a special disability trust up during their lifetime. Essentially, though, once the assets are in, they're in. So it's not a decision you can change your mind on quickly. It's a genuine gift into a trust, and so that asset no longer is that family member's asset anymore. And there are some rules around, making sure things are dealt with at arm's length. So a property can't go into a trust and then be leased back to the parents of that disabled person so that you maximise all benefits. It's all got to be pretty arm's length. But that obviously goes into part of what we do in advising clients about whether these are suitable and what the various options are. And like I mentioned, there are some great tax and duty exemptions for gifts of assets made into a trust during a person's lifetime. Obviously it's fantastic. There's a reduced reliance for the individual beneficiary on the disability support pension and government housing, which has got great public policy benefits across the board. One of the things we don't often talk about a lot is that often disabled beneficiaries are unfortunately quite vulnerable, and so the trust structure itself and the fact that it's being controlled by somebody external to that beneficiary provides a lot of security for that person, so that those assets are protected in the future of the accommodation and other assets for that disabled beneficiary protected. And it also, because when a special disability trust is set up, there's the ability to determine if that primary beneficiary passes away, where the assets left in the trust go to after that.
Yeah.
At the time the trust is made, there's a reduced need for a person with a severe disability to have to make a will, and often that's a significant challenge just by the nature of the disability. So plenty of benefits there in the right circumstances and with the right planning. So I covered quite a bit. Tristan, other matters that need to be considered when we're talking about special disability trusts?
Not everybody's in the position to gift a property into a trust during their lifetime or significant amounts of money, and often people with a child who's got a disability, not always, but often the child might be living with the parents, and they're providing care. The parents are providing care to the child during their lifetime. So, I can give an example of something that we see quite commonly with clients. A kind of standard scenario where, someone is looking after their child and they're preparing, for their succession, and what's going to happen with, to their child's care after they pass away. It might be that they have 3 children. One child has a disability, and the other 2 children don't have a disability, and during their life they don't have the financial resources to gift a property into the trust,
of course,
for the child, which is quite common. But upon their passing, obviously they want their child to have somewhere to live, and some cash there to help with their expenses. So it might be that the will we prepare for them sets up one of these trusts.
Yes.
And upon their passing, the property that they own goes into the trust, and some cash up to the asset cap limit, or however high they can get.
Yes.
And for example, any surplus money, if there is, could either be given to the other children for their direct benefit, or if that's not the wishes of the will maker. They could be any money that's in excess of the asset cap limit could be used in another type of trust, a testamentary trust, for example, and that could mitigate any potential issues for the disability support pension. And then the money could be applied for the benefit of the disabled child for the remainder of their life. And as you said, upon the passing of the child with the disability, the trust deed would say where the assets that the trust hold are distributed to.
Yes.
Which for example could go to the other surviving siblings.
Yeah.
Which is that's a fairly common scenario, and a really a scenario which would greatly benefit the child.
Absolutely. And as you mentioned, there's a whole lot of structures in place to make sure these continue to work. So those CPI increases to the asset caps and the discretionary spending, the ability for those assets to benefit that disabled child for essentially their lifetime. It's worth considering that, yes, when that primary beneficiary passes away, that special disability trust can't continue. That the trust is really built around that individual, so that trust will be wound up. But as you've explained, there is the ability for that the assets of that trust to go directly to who the other family members who the family would like to benefit. So there's some really great long-term benefits there. Like all of our advice as lawyers, it depends. And so these are structures that we can use, which are, really quite dependent on an individual's circumstances. We've had clients where there might be a windfall that was unexpected, or a settlement, or the family's come into a significant inheritance and they decide they want to set up this structure during their lifetime. And so that's a fantastic thing because, the parents can set that structure up, they can see it working but they can also start to plan around succession for who takes over control next. And that gives some great benefit. But like you said, equally there are a significant amount of families who are just thinking about purely if they were to pass away, how they benefit their children, which may include a disabled child. And this is one of the tools in the arsenal, basically, that we can advise on that will give really it's about maximising the benefit for that child and making sure that they still get all the benefits associated with that disability support pension. Again, which it's so phenomenal that the government have decided that, we can have, there should be some ability for there to be both worlds existing, together. An asset base and property and some security while still maintaining that disability support pension, which covers so much.
Yeah, for sure. And even that discretionary spending amount of $14,000, which is indexed, is quite generous over the year. That could pay, as you said before, for some travel or a new TV or whatever makes the person with a disability's life more enriched. So it's it is a really, really great thing the government have enabled. So if you're in a position to do so, we see a lot of value in it, and it'll ensure that they've got a really good quality of life for as long as they live.
Fantastic. And like all of these things, as we said, it's nuanced and it's going to really depend on circumstances. But hopefully this episode gives a little bit of an insight into just what they are and how they operate. And maybe it triggers some thinking about longer term planning or about something that we might actually be able to help implement in the short term. Either way, I think we've covered quite a lot today, Tristan. We're just about out of time. Thanks again for lending us your insights into special disability trusts on the episode today. And I hope you'll join us for future episodes soon.
See you on the next one.
Fantastic. Cheers. Well, that was another episode of Where There's a Will, There's a Way podcast with Coulter Legal. Thanks to our listeners and look forward to having you with us on another episode very soon.